All right, so we're seeing some very optimistic projections when it comes to consumer spending for the holiday season. Do you believe these forecasts are correct? And are there any other factors we should look at other than the year-over-year rise? Is there something else that tells or gives us more information about really what's going on with consumer spending this holiday season?
Yeah, I mean, I think, consumer spending has been strong. Somewhat surprisingly, I think, as we got into the holiday period with student loans coming back into play, high levels of credit card debt, we thought the consumer would be a little bit more, I guess, judicious in its spending, but that doesn't seem to have happened. I guess if you're working, you're spending, and we think spending was strong during the holidays. I do think it's still favoring services and leisure, going out to dinner versus goods, because if you were in the market for a TV or something like that, we had quite a bit of deflation there. So I think the real question will be for retail is what does profitability look like? I think the discounts came fast and hard during the holiday
Right.
period. So I do think we'll have to see where profits are.
Yeah, you mentioned some of that discount. You gave us an anecdotal example. An 86-inch TV at Costco going for $898. Sounds like a deal. I don't have a good read on the TV market, but that certainly does sound lower. I want to look ahead to 2024. We're seeing record levels of credit card debt. You mentioned student loans coming back. How does that impact the consumer environment for next year?
I mean, I think it's a tough call, to tell you the truth. Last year, we had a 75% chance of a pretty significant downturn, 25% chance that the economy would just click along and there wouldn't be any problems. Wish had the percentages reversed, but that's what seems to have happened. Looking forward, we have a couple things playing in the favor. It's an election year. Fed's turned dovish. Unemployment remains very low. So those are some of the pluses. I think as you look at the negatives, we do have credit card debt that's high, and we've seen delinquencies go up. So if you look at the environment, and certainly one more geopolitical event is probably one too many.
Right.
So I think so that makes us really look at what companies we can do through thick and thin, do well through thick and thin.
So you mentioned the dovish Fed, rates declining a bit, but I do have to ask you, is that a rising tide that lifts all boats? Because it seems like there's so much pent-up demand to buy houses and cars and things like that. If the rates continue to go down, does that boost all consumer spending or more big-ticket items?
Well, I mean, it's certainly, if you look at the stocks of like a Home Depot or Lowe's, you would say, gosh, people are definitely pricing in a rebound in housing. So I do think that's being anticipated in the market. From our perspective, we just are a little bit more cautious. There's not a lot of supply out there in the housing market. I mean, clearly rates have come down quite a bit, but 7% mortgage is still pretty high. So that we would favor, and I know that people are kind of trending away from Walmart, let's say. We think Walmart's a great buy going into the next year because, number one, if the economy does pull back a little bit, they should do really well. If the economy accelerates, I think one of the things that's underestimated in Walmart is what they've done in general merchandise. I mean, they've really improved their general merchandise, and we think that's going to have a big impact on the business if the economy continues to click higher.
Yeah, one of the other picks is Dollar Tree, but give us a sense. What's general merchandise? Is that toilet paper, soap? What is that in particular?
No, it's the TVs, it's the clothing. They've really done an incredible job on that side of the general merchandise side.
So give us a sense. Dollar Tree doesn't really sell a lot of clothing, I don't believe. I haven't been in one in a while, but they certainly don't sell TVs. Why is that your other pick?
Well, I mean, I think if you look at Dollar Tree, it's a stock for all seasons. If things are bad, it's an extreme value. If things are good, they have a number of company initiatives. It's kind of the ultimate treasure hunt. So it is somewhat discretionary. And we're seeing them bring in multi-price points. The stock has not performed well as they kind of trying to turn this ship. But as we look at it, we do a lot of field research. We have a consulting arm, and we're out a ton of stores. We think they are making progress. And I think most interesting is their move to multi-price points. So instead of everything's not $1 anymore, it's $1.25. They're bringing in $3, $4, and $5 items. They are going to put it forward in 24, much more, I think, kind of formal strategy around this multi-price point, which we believe on top of their unique merchandising can drive much higher revenues and much higher earnings for a number of years, by the way.